Welcome to once again in Wealth Autometrics. In previous lecture, we have learned how to automize our investment. So, in this lecture, we will continue with our new strategy, that is ETF 3% down buying strategy. So we will discuss about this in detail, like how we can invest with 3% down using a GTT order. So this is one of the best, powerful, long-term, smart investing strategy with GTT order. Every broker provides that GTT order. So let us discuss in detail. So most of the things what will happen, like whenever market will fail, most people panic, but that is the right time to buy on dips. So in this video, we will cover everything about buy on dip strategy, ETF and all. Like so today I will show you like how to calculate 3% down ETF down strategy, which ETF we will use, and using a GTT order, we can simply grow our wealth without stress free uh, in any market fall. So market dips are basically buying opportunity, but timing them is hard. Like when it will go up, so that is very hard to predict the price of the market. So here what we'll do, we will do buy on dip strategy. So here we will allow automatically buy ETF when there is a 3% fall in any ETF. So this is a ultimate autopilot investing system, we can say. So this is the perfect strategy for professional as well as long-term investor looking to build wealth uh, in crores without the stress of market. So, what is a ETF first thing? So, ETF is a basically group of stock packed together in one basket. Simply, if we consider most popular ETF in Indian stock market is a Nifty Bees. So, Nifty Bees contain 50 top companies across the India. So, that index is tracking all these companies. So if we invest in Nifty Bees, so our automatic investment will goes to top 50 companies of India. Same thing, S&P 500 ETFs contain biggest 500 US companies, and gold ETF, which will give us the physical gold price movement. So when you buy one unit of ETF, you will automatically invest in all the company. So every ETF have a holding. So in we can also discuss those things in further lecture. Uh, so now, why ETFs are very popular? Because of low cost. So if we see like a ETF Nifty BC's price currently around 295 to 290, so it is a very small price. So that 295 will invest in all the Nifty 50s companies. Same way, it has a very diversification. So if we have invest in only one stock and that company will shut down, then our investment will fail. So to diversify those things, ETF came into the picture, where it will invest on all the topmost companies. So our capital will never become a zero. So it will lower the risk of our investment, and it is a very easy to buy and sell. So whenever you want, you can sell. Whenever you want, you can buy. Like a normal share, you are buying using Zerotha, Angel One, or Grove, whichever a trading platform you are using, and it is a very better investment for long term purposes, not a short term purposes. Index beat many mutual fund. So what mutual fund is generally trying, they are trying to beat the ETF, but over a long term period, most of the mutual fund manager not beat the ETF return. So, and it has a transparent, like we know, like uh, in which stock our investment is uh, gone. So we can know like that. So you know exactly which stock it holds, this particular ETF. And why should invest in ETF? So, like, who should invest in ETF? So, beginners, long-term investor, busy people, they can invest in ETF because, working people don't have time to track the market, so they can simply invest in ETF. Now, ETF versus mutual fund. So, what exactly difference between ETF and mutual fund? So, ETF expense ratio. If we see any mutual fund having an expense ratio around zero point 0.5 to 2.5%. So, they will charge that amount to manage our investment. But ETF expense ratio is very low. So, we can get more return as compared to the mutual fund. So if your goal is long-term wealth creation, so ETF is a cheaper way to get more return. ETF follows an index like any ETF like Nifty Bees, it follows directly Nifty 50 index. Small cap ETF that will follow directly small cap index. So there is no human interaction over there. So it is totally automatically. So we cannot play with our emotion in that case. So mutual fund depend on fund manager skill. uh, so if any fund manager will change, in that case we that return may impact. So ETF always perform better than mutual funds, and you can buy ETF at any time. ETFs are traded in live market. So if like in one day Nifty falls 2% on a day, and after end of the day it has recovered, so we have a chance to buy it low. But in case of mutual fund, they have a NAV, so NAV will update at day end of the day, so we cannot buy a mutual fund at live price. So that is one advantage over mutual fund versus ETF. So we can have some, like we can set some GTT order on lower price. So mutual fund perfect for SIP, like the people who don't want to do anything on the market, they can do the uh, mutual fund SIP. But some people wants to do some their portfolio by their own, they can invest in ETF. ETF is a best for deep buying 3 to 5% down. Uh, so you can also do hybrid strategy. You can do some SIP mutual fund, and you can try to buy ETF on buy on dip strategy. Using this buy on dip strategy, you will get better return over to your mutual fund. So mutual fund have a exit load, but ETF don't have like exit load. If we exit from a mutual fund like before 1 year, it will charge 1 to 2%. But in case of ETF, there is no any exit load. If you want freedom to exit anytime, go for ETF. That is simple. ETF work better in long term, not in short term. ETF investment will give massive return over 10 plus years of investment. But it may happen like some mutual fund give 3 to 5 years good return, but in next 3 to 5 years it will not give full return. So what is the 3% down strategy? So whenever market falls 3% from your last buying price, you set just GTT order automatically. buy your favorite ETF. This means you buy more when things are cheaper. You average your cost without any thinking and you grow your wealth on autopilot. So these are the sample portfolio of ETF which we have created for investment of ETF, that is totally for learning purpose. Before investing this thing, you can take your investment decision after considering your financial advisor, right? So I will explain everything like you can invest in this ETF 20%. This is a Nifty Bees ETF. This is a Nifty Next 50 ETF. This is a HDFC Mid 150 ETF. This is a small cap. This is a mass top 50. So S&P top 50 companies. This is a momentum ETF, and this is a gold bees, and this is a silver bees. So this way we can allocate our portfolio. So how to use GTT order for this strategy? So divide your monthly or quarterly amount according to the percentage of allocation. Like after buying, let's take on one example. So Nifty B's current price is 250. Then use this base price and find out the 3% down price. So for to calculate these things, 3% down, so 250 into 0.97. So we will place our GTT order of this as 240.2 0.50. So this is a 3% down from last traded price or last buying price. So whenever that price will come, our ETF will automatically buy. We should need to add our fund in our trading account. So this way we can create a GTT buy order. And every market drops 3%. Your order triggers, you accumulate more, average price comes down, and reset the GTT order after every buy. Once you buy that, so you can also reset your order with that buying price 3% down. So if let's take on one example, if index fall more than 20%, so you will buy every unit on 3% down price. So you will have an average of all these. So I have prepared one Excel. I will showcase after this presentation why this strategy work. So this strategy uses Rupee cost averaging, automated deep buying. You buy more units at lower price and your long-term CAGR increases. You don't need to time the market. The system buys for you. Who should use this strategy? A busy professional, long-term investor, people who want to wealth creation without stress, they can use this strategy. Anyone who wants to automate stress emotion free investment, they can use this strategy. Now let me showcase that ETF, each ETF, like how we can allocate. And let's take one example. Like I have prepared one sheet. I will put this sheet in this video description, so you can check that sheet. Like for example, we have identified these top 8 ETF, and we have also allocated the allocation of percentage. And so you can also change your allocation if you want, using getting advice from your financial advisor, and buy amount for this. If you want to invest monthly 25,000, then you can divide this way. And here you can see the live price of this ETF. This is the current market price of each ETF. Like if I have did the calculation for down 3%, for example, currently this ETF price is 296.46. So whenever you can place one GTT order at this price, this is the 3% down price of this last traded price. So like if you want, like if you change over here any cost, like 293% down. So you can see over here 291, 281. If you buy at 299, then you can see 290. So this way, I have prepared this sheet, so you can look at and let me know in case if you need more detail regarding this. I will help you out on that via connecting from the channel. Yeah, so and one most important thing, this is a educational purpose only. Before doing any investment, consult your financial advisor before market investment decision. There is one disclaimer from my side. This is just for an execution purpose. Like if you see over here, this is the trigger check. So it will like let's take this is the 3% down price, and this is the same. So in that case, if you see your buying price has come, if you see if you want to buy as two two third 200, sorry, 140, then you can see over here. This will also change the status of the order. Yeah. So then, thank you. If you like this video, you can comment, share, or subscribe our Wealth Autometrics. Yeah, thank you.